Good afternoon, everyone, and welcome to Deloitte's Debrief Tax webcast series in Asia Pacific. Our webcast today is from our Geography Update series and is titled, Investing in Australia, Getting the Setup Right. I would firstly like to acknowledge the traditional custodians of the land on which this webcast is being held and pay our respects to elders, both past, present and future. My name is Kathy Saveski, and I'm a partner in the Global Employer Services team of Tax and Legal based in Deloitte, Australia. I have the pleasure of hosting today's webcast. I have four speakers with me today: Phil Davies, Albert Kanigasabe, Alicia Pauya, and Namrata Archery. Phil is a financial advisory partner based in Deloitte, Australia. Phil specialises in the area of economics, infrastructure, property and energy. Albert is a tax and legal director based in Deloitte, Australia. Albert specialises in the area of global investment and innovation incentives. Alicia is also a tax and legal director based in Deloitte, Australia. Alicia specialises in the area of immigration services. Namrata is a tax and legal director based in Deloitte, Australia. Namrata specialises in the area of global mobility, tax and payroll. You may access our bios on the left side of the screen. Before I introduce the agenda for today's webcast, I'd like to take a moment to highlight some of the features of our webcast console. First, all users are on listen-only mode. If you have any content-related questions, you can submit it at any time in the Q&A box at the bottom right of the screen. We will do our best to respond to your questions during the presentation. Second, all PC users can maximise or minimise each box at your convenience during the webcast. You may also explore the icons at the bottom of the screen. If you want to download today's slides and related publications, please go to the Downloads and Links box. On the other hand, mobile device users can view the slides and answer the survey on screen. Thirdly, if you require an attendance record for this event, you can download your CPE certificate by clicking the Request CPE icon at the bottom of the webcast console. Now let me give you an overview of the topics we will discuss. Phil will introduce the topic of investing in Australia. He will provide an overview of the Western Parkland City landscape and the opportunities available for companies to invest in the area. Following Phil, Albert will discuss the various grants and incentives available for companies to encourage setup and growth in Australia, with particular focus on New South Wales. Alicia will introduce us to the various immigration options available to attract talent from overseas to come to Australia, with particular focus by the federal government on target sectors. Our presentation will conclude with Namrata providing an overview of the Australian employment and mobility tax issues to be considered by employers who are sending foreign nationals to Australia, as well as hiring local employees. At the end of the presentation, we will have some time available for questions and answers. So now I would like to pass it over to Phil.
Thank you, Kathy. Welcome, everyone. Thanks for joining us today. My name is Phil Davies, and I'm a partner with Deloitte, focused on infrastructure. Today, I'm going to provide an overview of some of the investment opportunities in Australia, one of the most attractive places to live and work in the world, with an enviable quality of life. I will also provide some details of the fastest growing region, Western Sydney, where we're delivering a new city for 1.5 million people, as part of a 40-year vision. This will be the third city in the Greater Sydney region, and will have a new international airport and an aerotropolis at its heart. It's an 11,000 hectare greenfield aerotropolis planned to maximise the economic benefit of the new international airport. As you can see in the circle on the map, the new Western Parkland City, as it's called, is inland from the iconic harbour city, where you'll be familiar with the harbour bridge and the Opera House. The new city covers an area of 9,000 square metres and will have over 1 million residents. It's already a multicultural community with over 180 languages spoken and a long-standing diversity and entrepreneurial reputation. Western Sydney is home to the largest urban Indigenous community in Australia, with 60,000 years of history and knowledge. It's important to note that this region already has the third largest economy in Australia, and it's rich with startups and small and medium enterprises. Thanks to this strategy, the Western Sydney region has the largest commitment to infrastructure in any of Australia's regions at $50 billion. Back in March 2018, the Australian federal government, the New South Wales government, and 8 local councils signed an historic 20-year city deal to deliver a vision for growth in Western Sydney. This groundbreaking agreement followed the Deloitte Designing Western Sydney thought leadership in 2015, which outlined a vision for Australia's new third city in Western Sydney. For another 500,000 residents, 200,000 new jobs, it was a bold vision to accommodate long-term population growth and support the creation of jobs in the region. In September 2018, the federal government commenced the construction of a $5.3 billion Western Sydney International Airport at Badgerys Creek. They also committed with the New South Wales government to an $11 billion metro line connecting the new airport, the Aerotropolis, into the Sydney transport system. The Western Parkland City will be delivered over the next 20 years through a series of precincts designed to support local jobs, economic growth, and provide investment opportunities for global companies. The new city will be called Bradfield and will have its first buildings focused on Advanced Manufacturing Research Centre, providing inbound investors and local businesses alike with a world-class research facility. As a result of these commitments, government has already attracted 18 multinational companies who have signed Memorandum of Understanding and signalled an intention to invest in the region. Australia's strong economic growth has in part been supported by one of the fastest growing urban populations in the OECD. This has driven a long-term pipeline in infrastructure investment, which, as you can see on the chart from Deloitte Access Economics, continues into the future. Western Sydney is a very large part of that population growth and the associated infrastructure investment, as you can see on the top of the chart. We've already got investments committed for the airport at $5.3 billion, road and rail at $4.4 billion, the metro at $11 billion, and most recently, the enabling infrastructure for the new city itself committed at $1.1 billion. As I mentioned, the Western Parkland City is being developed through a series of precincts, and the first precinct under construction is the new international airport. This is going to be operational in late 2026. The airport is being developed by the federal government and will provide a curfew-free 24/7 operation with a strong focus on freight and cargo, supporting producers and growers in Western Sydney and regional New South Wales, as well as the rest of Australia. This airport really is the catalyst for the economic development of this region and will provide much needed capacity, aviation capacity, to the Sydney Basin. The new airport will provide producers and growers in Western Sydney and regional New South Wales with overnight access to markets in Southeast Asia for the export of high-value produce and goods, as well as inbound air freight in belly hold of the planes for local supply chains. The airport construction has already been a catalyst for infrastructure investment in the roads, in the metro, and once it's operational, will handle over 50% of Australia's air freight movements. The airport will process around 200,000 tonnes of cargo annually and a number of international operators and organisations have already signed memorandum of understanding with the Western Sydney Airport Corporation to help co-create the cargo facility itself. As you've seen so far, there really is a large focus on freight in Western Sydney, which isn't surprising as Western Sydney already has around 80% of Sydney's freight workers living in the community. Also not surprising as 80% of the freight transport in Australia passes through New South Wales. So New South Wales, Western Sydney, really at the heart of what's happening in freight in Australia. So quite appropriate, therefore, that we have a freight precinct going up early at Mamray Road. And that's one of the first precincts to be developed. It's a mixed-use industrial precinct with manufacturing and, of course, freight. And this precinct is really well connected with road and heavy rail into the transport system and the new city at Bradfield. On the north side of the airport, the Northern Gateway precinct is also planned to accommodate advanced manufacturing and warehousing, also with good access to road and rail networks. And this precinct will have a metro rail station connecting into the Sydney transport system. The new city itself, Bradfield, will be connected to the airport and the Sydney transport system with a metro station at its heart. And government is partnering with industry on a 13,000 square metre facility for advanced manufacturing research, targeting aerospace, defence and space companies. This recognises the importance of the region, which also is supported with the development of skills in the community, and the government is investing in new training facilities focused on micro-credential forms of skills development and leveraging a collaboration between some of Australia's leading universities in the region. And as a 22nd century city, the circular economy will be at the heart of the new city, with government once again leading in this aspect, using the significant infrastructure investments as well as technology to set new standards for waste management and adaptation to climate change. As I mentioned earlier, the New South Wales government has already signed a memorandum of understanding with some multinational companies and universities. Some of those are shown on this slide. And the new city of Bradfield is attracting company headquarters across aerospace, defence, space, advanced manufacturing, and as well as providing the opportunity for leisure and residential investments to support this city for another 500,000 people. It's also an opportunity to think about how we deliver utilities and services through different models and build more sustainable approaches to how we use energy and water as we move towards net zero, which obviously is sharply in focus with what's happening in Glasgow today. An important part of the opportunity for the development of this region focuses on agriculture and food, building on well-established industries and with significant opportunities for growth, with food exports and agricultural exports targeting markets in Southeast Asia, where 2/3 of the world's middle class will be living in the next 10 years. So big focus on investment and in advanced food and agricultural technologies are really at the heart of this precinct and present opportunities once again for advanced manufacturing and research. In planning a 22nd century city, smart technology and digital will play a key role. And once again, this is central to government's approach and vision for a sustainable future city, fit for the challenges of climate change in the next century. This will be one of the world's most technologically advanced and connected cities, enabling the optimization of energy and water use and providing the community with the tools to manage their own health and well-being. Thank you for listening, and please add any questions you might have into the Q&A.
Thank you, Phil, for providing such a comprehensive overview of the Western Parkland City. I would now like to pass to Albert, who is going to address the grants and incentives available.
Thank you, Kathy. I'm Albert Kanagasabi. I'm a director in the Global Investment and Innovation Incentives team, and I'm based at Deloitte's Western Sydney offices. The Australian government is currently embarking on a mission to transform Australia by attracting marquee enterprises and exceptional individuals to turbocharge our economy. As part of this ambition, the government has bolstered existing grants and incentives and also added a raft of new incentives to support businesses with onshore investment and innovation activities. These incentives are intended to help you with your innovation, sustainability, and growth agendas. To streamline the entry of businesses as well as individuals into Australia, the government has established the Global Business and Talent Attraction Task Force. The role of the task force is to fast-track visa approvals and provide access to unique visas. Further, the task force is able to endorse projects for government funding, fast-track incentive applications for existing programs, facilitate introductions to relevant industry networks, reduce regulatory approval times, and help with identifying talent and training opportunities. The priority industry sectors to receive this support from the task force include advanced manufacturing, health and life sciences, financial services, and enabling sectors such as tourism, education, and infrastructure, as well as enabling technologies and sciences that are key to these sectors. There are a number of factors that determine how well a company will perform in both maximizing the opportunity and in optimizing the value capture from grants and incentives that have been approved. This slide steps through some of the factors that you're likely to want to consider in assessing these opportunities. First of all, understand the current grants and incentives environment. This may sound obvious, but the landscape for grants and incentives changes regularly as new programs are established and old ones run their course. The interplay between state and federal government incentives similarly ebbs and flows between greater or lesser degrees of cooperation and collaboration. Which brings us to the next critical success factor. Know the key stakeholders, the decision makers, the champions, and the influencers for success. A relationship strategy to coordinate the key messages and stakeholders through each stage of the application process can make all the difference between success and failure. The next component is to establish a process around execution, as applying for discretionary grants typically requires input from multiple teams within the organization. And finally, we have aligned business activity to grants and incentive opportunities. Certain business activities are well established as being highly prospective candidates for funding support. By taking stock of what the business has planned in each of these categories can help to clarify the respective strengths and weaknesses and inform decisions around which opportunities are worth committing time and effort into pursuing. Based on your individual fact pattern, some of the relevant business activities to assess may include innovation and R&D, pipeline of capital investment needs over a multi-year horizon, employment footprint, especially the potential for new job creation stemming from investment projects, location or site selection activities that weigh up the potential impact of available incentives, and energy or sustainability initiatives that deliver on our government's productivity or decarbonisation priorities. Australian state and federal governments offer substantial government funding to businesses in a wide range of areas. Government funding can be available for investment projects with broad public benefits, such as new job creation, job retention, enabling infrastructure, export growth or import replacement, social and community benefits, environment and sustainability enhancement, research and innovation, and finally, new industry capability. Incentives can take multiple forms and can typically include cash grants, concessional loans, payroll tax rebates, and training incentives. Most large-scale grants are discretionary and competitive and are intended for specific investment projects. It's important to note that funding can only be sought for future activities, with the requirement that the funding agreement is finalized and in place before the project starts. With regard to the type of applicant companies, most corporate structures are eligible to receive grant funding. These include Australian companies, Australian subsidiaries or branches of foreign companies, joint ventures, and public or private companies. Trading trusts or partnerships may not be eligible for all incentives. An Australian business number, or ABN, is the typical minimum requirement for eligibility to most general incentives. One of the key investment attraction programs operated by the state government of New South Wales is the Jobs Plus program. The $250 million program offers payroll tax relief as well as capital funding for projects that will create new and ongoing jobs for the state. Typical investment support includes 100% payroll tax relief on new jobs for up to 4 years, up to 50% of project capital costs, and a wide range of in-kind, concierge, and facilitation services. Eligible projects must create more than 30 new jobs and commence before 30 June 2022 and be completed by 30 June 2024. Now, there's no cap on maximum funding per project. However, requests over $5 million will undergo additional assessment. We anticipate a 2 to 5 month turnaround for request initiation to final offer, depending on the complexity and scale of the project. The Australian government commonly has multiple large-scale grant funding programs operating at any given time. For example, the $1.5 billion Modern Manufacturing Strategy includes cash grant support for 6 manufacturing priority areas as shown on this slide. To deliver this funding, the government's main program is the Modern Manufacturing Initiative, which can offer up to $20 million in match funding for projects that increase the capacity, the capability, or the competitiveness of the Australian manufacturing value chain. Another area of current focus is the next generation energy solutions, with $1.9 billion in dedicated funding to target emissions-intensive sectors of agriculture, manufacturing, industry, and transport. This slide lays out some of the key funding agencies and approaches involved in delivering on that policy goal. These include the Australian Renewable Energy Agency and the Clean Energy Finance Corporation. The government has opened a $464 million Clean Hydrogen Industrial Hubs program, which offers up to $3 million for initial development, feasibility, and design, and up to $70 million for implementation work for investment-ready clean hydrogen hubs. I'd now like to speak briefly on the services Deloitte Australia offers in the discretionary grants and incentive space. Deloitte's grants team include dedicated specialists in connecting business and government to secure funding for high-merit, high-value strategic investment projects. Our standard services typically fall into 3 broad categories: advice on the landscape of funding opportunities and the development of strategic plans for engagement and delivery, developing comprehensive, competitive funding applications and supporting materials specifically designed to align both the investment project and the target funding source, ongoing policy and legislation monitoring and advisory support to identify and respond to risks, and also opportunities presented by changes to government policy directives. The last incentive that I wanted to cover today is the Research and Development Tax Incentive. This program is the Australian federal government's primary mechanism to support R&D and innovation. The program provides significant benefits to both Australian and foreign companies undertaking R&D activities in Australia. Unlike the competitive discretionary grants I spoke about earlier, the R&D tax incentive is an entitlement-based program where the claimant assesses the eligibility of their R&D activities and the associated expenditure and prepares and lodges a claim for support. The claimant can continue to make claims year on year, provided R&D activities are conducted. The program enables claiming of costs and expenditure incurred on experimental core R&D activities, as well as supporting R&D activities. The program is jointly regulated by AusIndustry and the Australian Taxation Office. It's a post-year process where the claim is made after the end of the financial year. The expenditure incurred on eligible R&D activities receive either a refundable or a non-refundable offset, depending on the total revenue or turnover of the claimant entity and certain related entities on a worldwide basis. For turnover that exceeds $20 million AUD in the financial year, an R&D premium of either 8.5% or 16.5%, depending on the R&D intensity, would apply. These premiums, combined with the tax deduction, provide a tax benefit of up to 46.5% of the R&D expenditure. The refundable offset available to companies with a turnover under $20 million has a premium of 18.5%, which combined with the 25% tax deduction provides an overall refundable offset of 43.5%. Both offsets are applied against the claimant company's tax liability, with any excess able to be carried forward into future years for the non-refundable offset and able to be refunded as cash for the refundable offset. Smaller entities with no tax liabilities can have 43.5% of their R&D spend refunded as cash. Our R&D tax incentive team is comprised of scientists and engineers from a variety of disciplines, and also tax specialists, lawyers, and accountants. The team is able to assist with accurately identifying eligible R&D activities via workshops and meetings with technical staff, and also via bespoke tools and templates. The technical team is also able to assist with implementing R&D frameworks within project management tools and the technical application expenditure, and also with solutions to capture R&D time and costs where required. That concludes my session.
Thank you, Albert. So we might now turn to our first polling question of the day. So the question is, what are the key considerations for your organisation when considering whether to expand in or into a particular jurisdiction? So if our audience could please choose all that apply. So number 1, access to skilled labour. Number 2, cost of labour. Number 3, incentives. Number 4, vicinity to customers or market. Number 5, the regulatory environment. Or number 6, you don't know. So while we're waiting for the results to come in, I might ask a question of Albert. So Albert, could you share with the audience, in your experience, what is the expected turnaround time from when you submit the application for the relevant grant or incentive to when the approval actually comes through?
The length of time to assess grant application is informed by a number of factors, including the number of applications received, the size of the application, the associated attachments, and also the resources allocated by government to assess the applications. Ordinarily, assessment of the application would take 2 to 3 months. However, due to the impact of COVID-19, we have seen this time frame extend to 6 months or longer, particularly for the larger grants, such as the Modern Manufacturing Initiative, which I spoke about earlier.
Okay, so let's have a look at our results here. So we can see, I mean, it's a very tight race, to be honest. Probably just sneaking ahead is the regulatory environment. And would you say, Albert, that's quite consistent with what you're hearing from clients?
That's correct. I think the understanding is that the regulatory environment can be quite challenging to navigate, and it is consistent with what we see.
Excellent, thank you. All right, so now I'd like to pass on to Alicia, who is going to provide us with an overview of the Australian visa options that are available for companies who are looking to send foreign nationals to Australia, whether this is on a temporary basis to explore opportunities and set up operations in Australia, or alternatively on a long-term basis, including permanent relocations.
Thanks, Kathy, and hi everyone. My name is Alicia Powyer, and I am a registered migration agent and legal practitioner based in Western Sydney. I sit within a larger Deloitte team called Global Employer Services, and we assist companies with any and everything to do with employment cross borders. So it's certainly an interesting time and has been an interesting 18 months in the immigration industry worldwide. In Australia, borders have been closed to temporary visa holders since March of 2020. And whilst our borders have opened for travel for Australian citizens just as of yesterday, there is no proposed date for when these restrictions will ease for temporary visa holders. The impact of these closures is that over 500,000 temporary migrants have left Australia since last year, and our net overseas migration continues to be negative. A further 77,000 people are expected to leave Australia this financial year, and this, of course, includes skilled migrants. Skilled workers are essential to the successful growth of the Australian economy, and in particular to the new Western Sydney precinct that Phil outlined at the top of the session. Australian authorities have started talking about the return of skilled migrants and the important role that they'll play in opening up our economy once again. And they have created what is called the Priority Migration Skilled Occupations List, which already does identify 44 occupations where visas and travel exemptions to our border closures are already being granted. With our unemployment rate at an all-time low, there's an enormously strong competition for talent, yet only a restricted talent pool from which they can be sourced. And immigration will definitely play a key part in the war for talent as we move forward. So what are we really seeing and hearing in the industry? Deloitte has played a key role in lobbying the government around changes to and easing of restrictions on our international borders. And certainly we see that emerging markets, such as the new Western Sydney precinct, will rely on the skill and talent of that global workforce, and we believe the government does see this also. A recent industry report has identified several major changes to be made to Australia's current fairly restrictive temporary visa program, and which I've listed here on the screen. And it's hoped that these changes will see it become easier and quicker for skilled workers to be granted work rights and entry to Australia. In particular, the ability to adapt to labour market needs and the recognition of emerging industries and occupations will be key as we move into 2022. So if you are looking to set up or expand your business in Western Sydney or indeed anywhere in Australia, you'll most likely need to bring in global talent to support your business growth, and these individuals are likely to require a visa. It's still absolutely possible to obtain a visa to work in Australia right now, despite the border restrictions. As I said, this is the case particularly for those working in the 44 listed priority occupations. But outside of this list, visas are available for highly skilled and business critical workers. And I'm just going to talk through now a few of the more common visa categories that businesses will typically use to bring such talent into Australia. The first is the visa listed here, which is known as the Global Talent Visa. And as Kathy mentioned, I think at the top of the session, this visa has been a great focus of government in recent months, who set up a task force seeking to bring in the brightest and best global talent to work in 10 future-focused sectors. The government is looking to support the economy by introducing innovative skills to high priority industries, and this will in turn create opportunities for Australians by transferring skills, promoting innovation and creating jobs. To be eligible for this visa, applicants need to be highly skilled and internationally recognised in one of the listed 10 target sectors. The target sectors you'll probably see align with many of the industries that Phil talked about and that we expect to see really flourish in the Western Sydney precinct, including the agri-food and ag-tech, advanced manufacturing and space, and the circular economy in particular. There is a minimum salary requirement for this visa, so you can see it really is intended for individuals who are performing at the top of their field and who will enter the Australian workforce with skills and experience that will help grow and develop the Australian economy. The great thing about this visa is that it doesn't require company or employer sponsorship, so it can be applied for directly by individuals or employees, and it provides for Australian permanent residents. So for many employees, this is an extremely attractive option, and for businesses, it assists greatly with the attraction and retention of staff and those looking for a longer-term relocation to Australia. But not all roles or all employees will be eligible for that global talent visa. So the most common way where companies bring skilled employees into Australia is via the temporary skill shortage visa, or TSS. So as you can see on the screen, this is a three-step visa process. Firstly, a business sponsorship is obtained where the company will evidence their bona fides and their ability to employ and sponsor those foreign staff. Secondly, a nomination application. So you nominate a particular individual to a particular open role or position. And lastly, the individual provides their personal details, evidencing that they have the skills and experience to undertake that nominated role with a TSS visa application or a Subclass 482 visa application. So what would you need to do if you're a sponsoring company looking to obtain the business sponsorship, so that first step in the process? And it's important to note that either an Australian entity or an entity based outside of Australia can act as the sponsor. If the business isn't set up in Australia, you can certainly show an intention to set up, or simply that you have contractual obligations already in place to provide a service or goods in Australia. In either of those cases, that overseas or offshore entity can then operate as the sponsoring entity for immigration purposes. If you do already have an Australian entity and you're looking to apply for a business sponsorship, it's just important to note that this can't be done by a shelf company. The company does need to be actively operating and legally established. So you would need documents such as a lease, commercial contracts, your certificate of corporate registration showing your ABN, financial reports and things of that nature to really evidence that the company does have the ability to sponsor and pay their foreign talent. If you have a new business set up in Australia, but you don't quite yet have all the financial documents in place, a plan can be prepared to show those proposed business activities and the proposed profits. So really, obtaining a business sponsorship is possible no matter which stage you're at in setting up your business in Australia. The sponsorship will be valid for 5 years and then allows the company to nominate foreign nationals who will apply for their TSS visa. So that second stage, once you've applied for either your onshore or your offshore business sponsorship, is where you would apply for a TSS nomination. And this is where you outline the role to be performed and the salary details of that role. There are a few key components of the nomination application. Firstly, the salary needs to meet what is called the market salary rate, where you would pay the foreign employee the same or more than an equivalent Australian role is being paid. And the base salary does need to be just over Australian $53,900 to be exact, so just under $54,000. In some instances, labour market testing is required, and that would show that there were not suitable Australians found to complete the role. And lastly, the occupation itself needs to be on one of the skilled occupation lists. So, for example, a taxi driver would not be found on that list, and we would expect reasonably that an Australian citizen or resident could perform that function. But for other skilled roles, for example, a software engineer, we would be able to align the nominated position to that occupation on the skilled occupations list. Then we move to the third and final step, which is that the candidate for the role applies for their TSS visa, outlining their skills and experience. So depending on the occupation, applicants would typically be granted either a 2 or a 4-year TSS. And just a note, I think we do have quite a few people from Hong Kong on the call, and there are some additional concessions for Hong Kong nationals that have been introduced. They're able to obtain a 5-year TSS visa, and they also have a streamlined pathway to permanent residence via this visa route. All applicants can include their dependent family who would have full work and study rights in Australia also. The applicants need to meet English, health and character requirements, and importantly, the applicant must have 2 years or more of full-time relevant work experience to the role. So for that reason, if you're looking at bringing out more junior staff or recent graduates, perhaps the TSS may not be appropriate. I'm just going to wrap up with a quick overview of the Subclass 186 visa. I know there's lots of numbers. The Subclass 186 is also a visa that grants Australian permanent residence. The difference with this visa class is that it's also an employer-sponsored visa. So unlike the Global Talent Visa, which can be applied for independently of an employer, The 186 has, again, a nomination by the company based on the role and salary, and then the individual submits their 186 visa, showing that they have the skills and experience to fill the role. A nominating business would need to show that there's a genuine need to hire this individual permanently. And I'd point out that there are some greater restrictions around the roles which are sponsorable and the age of the candidate, which is typically under 45 years of age. Again, just like with the Global Talent Visa, offering permanent residence via the Subclass 186 is a great way to attract, attain and retain foreign staff. But I would say that the TSS visa is a great option where you're looking to bring talent into Australia in order to upskill and grow your local talent base. Often this is achieved by temporary relocation of executives or other highly skilled employees who would then look to return to their home country. And they can certainly do so as Australia has a wealth of talent and it has been mentioned, a growing university sector, particularly in Western Sydney. And there's a strong and genuine ability to build your business and your workforce here, whether that's Western Sydney or elsewhere in Australia, with local talent. The market is well educated, of course, English speaking, highly skilled and an integral player in the Asia Pacific landscape. So hopefully I've given you a bit of an idea today on the ways in which you might best bring global talent into Australia. And from there, you can build and develop your Australian operations. Thanks, Kathy.
Thanks, Alicia. All right, so we're just going to move to our second polling question. So the question is, what would attract your top talent most to move to Western Sydney? So number one, an opportunity to obtain Australian residence. Number two, the ability to train and upskill local Australian employees. Number three, the lifestyle. Number four, to be instrumental to building the foundations of a new city. And number five, we're not quite sure. So while we wait for some responses to come through, I was wondering, Alicia, are there visa options for skilled workers who may only need to be in Australia for a short term, so much less than the 2 or 4 year TSS visa program?
Yeah, absolutely, Kathy. So I didn't get to talk about all the visa categories, but yeah, a great alternative for a period of 1 to 6 months is another number. So it's the Subclass 400 visa, and this is a visa for skilled workers, but for that shorter duration who are working on a non-ongoing basis. So it allows employees to come into Australia for exploratory work, contract signing, often marketing and sales types roles, and really just getting the business up and running. And unlike the TSS visa, there are actually much less strict requirements, for instance, around the English language skills. There's no minimum salary and things of that nature. So it's a really great option for companies looking to send skilled employees to Australia quickly and for a shorter duration.
Excellent, thank you. All right, so let's have a look at the results on screen. So yes, not surprising at all, the top marks go to the opportunity to obtain Australian residence. And I think this goes back to your earlier point about Australia being, you know, a wonderful country with great standard of living and obviously great access to healthcare and education. So yeah, no surprise there, followed closely by lifestyle. So. Okay, so moving on, I'd like to now pass to Namrata, who is going to provide us with an overview of the Australian mobility tax and employment tax considerations for companies who are setting up or expanding in Australia.
Thank you, Kathy. Hi, everyone. My name is Namrata Archery, and I'm a director in the Global Employment Services team. For businesses looking to set up in Australia, there are many flexible company structures available. These include branch, subsidiary, joint venture, flow-through trusts, partnership, and more. In determining the most suitable structure, a business should consider their commercial and investment objectives, as well as other key factors specific to the structure, such as the corporate tax rate, which can vary between 25 to 30%. However, this can be further reduced where we take into account the grants and incentives that Albert explained earlier. Other factors include funding, which can be through equity or debt, profit distribution, cross-border payment of interest and royalties, financial reporting preparation and filing, and the tax treaty network with almost 40 countries globally with beneficial withholding tax regime. The tax registrations required include the Australian Business Number Application, or the ABN, a tax file number, registering for goods and services tax, or GST, and also with the Australian Securities and Investment Commission, which is ASIC. You also have the option of applying for a substituted accounting period to align your year-end reporting globally rather than the Australian 30 June year-end. Obtaining an ABN is essential to carrying on a business in Australia. The rules here are very stringent, where certified identity documents of the company and its directors would need to be provided to the regulators. The typical processing time for an ABN application is up to 28 days. Once the registrations are complete, your business will be well placed to meet all tax filing requirements in Australia. In today's webcast, we will focus on the key employment tax filing requirements. And these are pay-as-you-go, or PAYG withholding, Fringe Benefits Tax, or FBT, superannuation, state payroll tax, workers' compensation, and employee share scheme reporting. So let's look at PAYG first. Employers are required to withhold PAYG tax from salary and wages paid to employees. This includes bonuses, cash allowances, and any other form of cash remuneration. This is to ensure that regular payments are made towards the employee's expected annual income tax liability. PAYG reporting is typically completed on a monthly basis via single touch payroll, where amounts are reported directly to the ATO on a live basis. We have graduated tax rates in Australia, with the first 18,000 tax-free and the tax rates starting from 19%. The highest tax rate of 45% only comes in where the salary exceeds 180,000. Please do note, where employees continue to be paid from their home country payroll or a foreign payroll, there will be a requirement to implement a shadow payroll in Australia to ensure that all employer reporting obligations are met. Now, Fringe Benefits Tax, or FBT, is an employer-paid tax in relation to all non-cash benefits provided to employees. The FBT year runs from 1st of April to the 31st of March, and this is different to our 30 June financial year end. And an annual FBT return is required to be lodged. The current FBT rate is equal to the highest marginal tax rate at 47%. This provides an opportunity to effectively structure benefits as part of your employee's compensation package to maximize any tax savings for both the employer and the employee. For example, where the employee's marginal tax rate is lower than the FBT rate, a cash allowance may be more tax effective. Or where the benefits are concessionally taxed, such as motor vehicle benefits or meal and accommodation allowance for business travel, a fringe benefit may be more tax effective. Now, Alicia talked earlier about bringing foreign talent to Australia. How can you attract this foreign talent to Australia? Well, there are several benefits that can be provided to seconded employees. Benefits which are exempt or concessionally taxed include visa and immigration costs, relocation costs, and living away from home allowances. Australia is a high taxing country, and therefore you may wish to consider a tax equalization arrangement when seconding an employee from offshore rather than a local employment contract. This is where the employer would cover the Australian taxes due on behalf of the employee, and the employee continues to pay the same tax as if they had remained in their home country. This arrangement removes tax as the critical factor in the employee accepting a secondment to Australia. Now, superannuation, employers are required to make compulsory contributions on behalf of employees as a savings towards their retirement. Currently, the contribution rate is 10%, and this is capped to a maximum earnings base every quarter. The rate is proposed to increase to 12% by 2025. There is a strict requirement to report on a timely basis, and failure to do so will result in penalties and interest charges. Payroll tax is a state-based tax on taxable wages paid to employees, where the total taxable wages exceeds the threshold for that particular state. Where there are other related Australian entities, grouping provisions may apply when determining the applicable threshold. Taxable wages essentially include salary and wages, including cash allowances, bonuses, superannuation contributions, and also fringe benefits. Where wages are paid in another Australian state or territory, each state's threshold is apportioned with respect to total Australian wages. These rates and thresholds vary from state to state, and the current threshold for New South Wales is 1.2 million in wages, and the payroll tax rate is 4.85%. Now, this is an area of reporting where you can generate some tax savings. If your business qualifies for the state incentives that Albert mentioned earlier, a 4-year exemption can be claimed from state payroll tax for those new employees. Workers' compensation is a form of insurance to cover employees' workplace injuries. The insurance premiums are calculated by taking into account the industry classification rate and multiplying it by how much the business pays in wages. Ultimately, the rate will be dependent on the insurer's assessment and can range between 1% to 5%. Employee share scheme reporting. This is separate to payroll reporting, where no PAYG withholding requirement exists. This can be used as a reward and retention tool for providing employees with tax-deferred remuneration. Our team can assist here with share plan design in accordance with Australian tax rules, as well as reviewing foreign plans from an Australian tax perspective to confirm the correct deferred taxing point. Now let's look at some employee matters relating to international placements. The residency status of the employee is what dictates the income that is assessable in Australia. Now, residency is determined on a case-by-case basis based on the individual employee's facts and circumstances, using the criteria provided in Australian legislation, case law, and rulings. Unlike other Asia-Pac countries, Australia does not have a de minimis days rule where once you exceed a certain number of days, you become subject to tax. Therefore, an employee travelling to Australia may be subject to Australian tax whether they spend 5 days here or 50 days here. However, exemption may be available under the relevant double tax agreement with Australia for your short-term assignments, less than 6 months. That would apply to your 400 visa holders. Please note that the treaty simply provides exemption from PAYG and FBT and does not extend to superannuation and state payroll tax. There are also proposed changes to simplify the residency rules, where an individual employee can determine their residency status with more certainty. However, this is yet to be legislated. To summarize, yes, Australia is one of the higher taxing countries, but the incentives Albert talked about can certainly reduce the tax impact. And that, paired with the quality of living, our healthcare, education systems, and of course our beaches, who would not want to live and work in Australia? Would you agree, Kathy?
Of course I would agree. Thank you, Namrata. So this brings us almost to the end of today's session. So we do have a little bit of time now to respond to some questions from our audience. So firstly, we have a question for Alicia, and it's around the TSS visa. So Alicia, are there any age limits for applying for this category of visa?
No, there are not. So for the TSS, also the 400 visa that I mentioned, those temporary working visas, there are no age restrictions. They tend to apply more so on the permanent residence side of things. So no age restriction for the TSS.
Okay, thank you. All right. So we also have a question for Phil, which is, why would an organisation consider expanding to Western Sydney compared to any other city in Australia?
Thanks, Kathy. I think we've covered these points quite well, but in summary, I'd say Western Sydney is the fastest growing region in Australia. It's got a great quality of life, to offer. It's the third largest economy, highly skilled workforce, seeing a huge amount of investment both from the federal government and the state government. And it's a really great location for multinational companies close to the airport. And there's a big focus on investment in aerospace, defense, space, pharmaceuticals, advanced manufacturing. It really is a 22nd century city, and it's the first new city in Australia for over 100 years.
Okay, thank you, Phil. All right, so now we have a question for Namrata. The question is, will employment income earned under a non-Australian employment contract still be taxable in Australia? So, for example, a split employment contract.
The answer is yes, or it depends on the employee's residency status. So regardless of where the employment contract is based from or where you pay your employees from, if that employee is physically based and providing services in Australia, that employment income will be sourced to Australia and therefore taxable here.
Okay, thank you. And we do have another question for you, Namrata, and that is whether we are seeing the government authorities, and specifically the Australian Taxation Office, use data matching to identify areas of non-compliance.
Yes, absolutely. We are aware of the ATO and the Immigration Department sharing data. We also know that the ATO exchange data with other foreign government agencies. You may have an employee who is traveling frequently to Australia or is working remotely from Australia, and this may trigger questions from the ATO, such as, does the foreign employee have the appropriate visa to work in Australia? Has the employee, or why has the employee failed to file an Australian tax return? Is there even a requirement to file a tax return? Has the employer met their employment tax reporting obligations, or is the employee claiming treaty relief, which still means that super and state payroll tax would apply. So as you can see, it not only raises issues in terms of tax compliance for the employee, but also tax compliance for the employer.
Okay, thank you, Namrata. All right, so unfortunately, this is all we have time for today. But if anyone does have any additional comments or questions, please feel free to reach out to any of us, any of our speakers today, and we'd be more than happy to talk to you. So to Phil, Albert, Alicia, Namrata, thank you. And thank you to all of our audience who were able to join us today. We would like to encourage you to fill out the short survey that will pop up momentarily on your screen and tell us what you think about today's program. If you did join us late, please note the presentation will be archived for future viewing. And if you feel that others would benefit from this webcast, please share the webcast via the Share This icon, or have them visit the Debrief's website. We will respond to all the questions that have been submitted during the webcast in a couple of weeks. And please do not forget to tune in to our next scheduled webcast from the Corporate Income Tax series on 11 November, titled The Impact of the OECD Two-Pillar Solution in Asia Pacific, Latest Developments and What to Expect. And last, from all of us at Deloitte, thank you for your participation in Deloitte's Asia Pacific Tax webcast today. Thank you and goodbye.